Why did Nvidia drop last week after the earnings? It was up today, but yeah, after the earnings it dropped. So what's the deal with that?
The amazing part is like an hour after I had put some of my synopsis in Telegram for Stock Club, I saw Rashad, you doing the voiceover, and Troy back in the theater room, which I'm loving this series, right? And the point that we both agree upon for sure is sometimes great is not great enough. Like what Wall Street wants Nvidia to do is triple the numbers that they're doing now, and it's mathematically impossible. They want Nvidia to almost produce Ponzi-like returns to have a positive outlook going forward. With Nvidia, I wouldn't play the earnings game. If you're playing long term, you are fine. But I think they have been so exceptional. It's like that 1 year, like when Barkley got MVP over Jordan. And it's like, yeah, Barkley had a great season with Phoenix and Dan Marley and Tom Chambers, whoever was on the team, right? But
Kev
Mike
Johnson.
probably should. Who?
Kev Johnson.
Okay, Kevin John Beast, right? Underrated
Tough.
too. Underrated point guard.
Tough.
But Mike probably should have got the MVP. So because they've been doing great for so long, investors are not happy with the revenue numbers and the guidance. And I think that's misguided. Because if it was any other company, people would be jumping into the heavens over the returns. So, but what do you guys think?
I mean, you want to talk about it almost is Ponzi scheme numbers. These numbers are ridiculous. Like we can't just like pretend like they're not. They definitely are. Yeah, 79%. I think they're 91% year over year in terms of revenue growth. We talked about the data center growth. We talked about the future guidance. It's all there, man. You know what's interesting? I looked at 31 analysts. Their target. Mm-hmm. None of them are under 250 for the year.
No,
none of them are under 250. What we saw was an opportunity. If we looked at the EMAs, I know a lot of people have been doing their technical analysis, right? We were watching that 174 line. Yep. Let's see if it goes under there, right? That's the 400-day EMA on the daily chart. Let's see if it goes under there. It flirted with it. It bounced right back off of it. This is an opportune time. If you're buying a stock long term, you should have it. If you're buying leaps out a year, 2 years, you should have it. Nvidia is not going anywhere. It is the greatest company in this United States currently.
Sure.
But again, the Capex spend is still the concern because a lot of people are spending with them, which is interesting to put the company that is taking most of this revenue and has a 53% or 57% profit margin is the one that's actually pulling back.
Mm-hmm. And once again, asymmetric risk to reward. Like if the high is 212 and it got to 197, that's not the time to be pouring money in. And I mean, if you guys listen, I gave you guys a price where to enter, but asymmetry in your mathematical equation of when to buy definitely has to factor in, given that they knew these attacks were going to happen. Now it's not the right time to deploy the capital.
Yeah. And if any other sector we looked at, like we said, software moved up, think about when they're talking about CapEx spend, where are they spending the money? Yeah, we could talk about infrastructure, but what's going inside the infrastructure? GPUs. Who are they spending it with? Majority of them are spending it with Nvidia. It's going to be here. If you got into the stock, congratulations. It will be here. It's not going anywhere.
What's the top asset for the next 12 months?
The ones we've been telling you about. I think it's a great question, but the ones we've been telling you about: stocks, gold, crypto, real estate. The matrix of what to invest in amongst the good elite won't change. We don't have access to the waterways and ocean rights and air rights, so stocks, real estate, crypto, and gold.
Okay.
What do you guys think? If there's another answer,
that is the answer. That's the answer. That's the answer, folks.
Yes, sir.